Alright, so we know we have to contribute to the CPP, but how does that actually happen? And how much of your hard-earned money are we talking about here? The first step to benefiting from the CPP is understanding how you contribute to it. First off, let's talk about contribution rates. These rates change every year, so it's important to stay updated. For 2024, the employee contribution rate is 5.95% of your pensionable earnings, and your employer matches that amount. So, for every dollar you contribute, your employer contributes a dollar too. Not a bad deal, right? It's like getting free money towards your retirement. These rates have been steadily increasing over the past few years. The contribution rate was only 4.95% in 2018, and there are plans to increase it to 6.95% in the coming years. Now, let's talk about two important terms: the year's maximum pensionable earnings, YMPE, and the year's basic exemption, YBE. I know, more jargon. But bear with me, it's not as complicated as it sounds. The YMPE is the maximum amount of earnings that the CPP contribution rate applies to. In 2024, that number is $68,500. That means any earnings above that amount are not subject to CPP contributions. So, if you're lucky enough to earn more than $68,500, you won't pay CPP on the portion of your income that exceeds that threshold. The YBE, on the other hand, is a small amount of earnings that are exempt from CPP contributions. For 2024, it's $3,500. Think of it as a little buffer zone. So, you only start paying CPP contributions on your earnings after the first $3,500. Basically, you subtract the YBE from your gross earnings before multiplying by the contribution rate. These figures change almost every year. It is important to know them, or you can mess up your contributions. Here's a simplified example. Let's say you earn $50,000 a year. To calculate your CPP contributions, you'd first subtract the YBE, $3,500, from your earnings, leaving you with $46,500. Then, you'd multiply that amount by the employee contribution rate, 5.95%, which gives you $2,766.75. That's how much you'd contribute to the CPP for the year, and your employer would match that amount. The employer would also pay $2,766.75. Now, if you're self-employed, it's a bit different. You're essentially both the employee and the employer, so you have to pay both portions of the contribution. That means you're contributing at the combined rate of 11.9% for 2024. It's definitely something to keep in mind when you're doing your taxes as a self-employed individual. You need to plan for this, as it can be a significant amount of money. For example, if you earned $50,000 in self-employment income in 2024, you would subtract the $3,500 basic exemption, then multiply by 11.9%. Your total CPP contribution would be $5,533.50. That is a lot of money. Another thing that is new in 2024 is the addition of a second earnings ceiling, the year's additional maximum pensionable earnings, YAMPE. It is 7% higher than the YMPE, meaning in 2024 the YAMPE is $73,200. If you earn more than the YMPE, you will contribute an additional 4% on any earnings between the YMPE and YAMPE. This is a new calculation that you need to know in 2024. I remember when I first started my own business, I totally underestimated how much I'd have to pay in CPP contributions. Let's just say it was a bit of a shock come tax time. So, learn from my mistakes, people. Plan for it, and make sure you're setting aside enough money to cover those contributions. It can be the difference between a smooth tax season and a stressful one. One common question I get is, what happens to my contributions if I switch jobs or take time off work? Well, your contributions are tied to you, not your specific job. So, even if you change jobs multiple times in a year, your total contributions for the year will still be based on your total earnings. And if you take time off, you simply won't contribute during the period you're not earning. But keep in mind that if you do not contribute as much, your benefits will be lower in retirement. There you have it, the lowdown on CPP contributions. It might seem a bit complicated at first, but once you get the hang of it, it's really not so bad. And remember, those contributions are an investment in your future, so it's worth taking the time to understand how they work. You may even want to make voluntary contributions to the CPP.